Good evening, this is Nick Inman from VolumeProfileTrader.com on Monday, November 7th, and let's cover the S&P 500 here. Last night, Sunday and Monday morning in Globex, we had Globex high of 1259.50 and Globex low 1231.50, and actually 1232. And why that's important is it covered for the majority of the day, other than this poke out after hours, it covered the range. So there wasn't much to do today, although we got more of the same in terms of staying within the range over the last 3 days. We see this 1259, 1260 level has been our ceiling, and likewise this 1230 level has been our downside support. And why has it been that? Well, if we zoom out one to a 30-minute chart, and it's a 20-day 30-minute chart, and each one of these volume profile is 1 week. And you can see this was, this is the consolidation over the last 3 days that we've been looking at. And you can see last week's point of control ended at the top of the range. So there was, going into today, we saw a nice, a decent push up in the morning, but it really got stuffed by last week's value area high around the 1253 level. Those, that was around the big turning point for the day. And we shifted lower and traded lower until we found support at the 1236 level, which was, it's been a swing point for the market. And you can see the volume that has stuck out relative, to other volume points other than this 1220 level and this 1248 level, which is the point of control of last week. Now that 1236 level is also the point of control in high volume area for the week before. So 2 weeks ago, that was a big support resistance swing point in the market, and last week we had resistance at those levels until we broke off, and now we're seeing support every time the market hits those levels. So from a buyer's standpoint, this market looks good. Every time we see this dip to prior resistance is now support. And now in Globex overnight, where we've seen resistance at the 1257 to 1260 level, well, we poked our head above it, and for the meantime, we got rejected, and we are back within the range. So overnight, it's going to be important to see how the market trades. But for your levels, this 1257 level, it will be interesting if we can stay above it. Will the market hold? If not, then the next level is this 1255, 1254 level, which in general has been resistance. Every time it's gotten to those levels, it has been right to sell. And below that, then you get down to the point of control level, which is, anywhere from 1248 to 1244. That's generally speaking, but really that 1245 level, we'll use today's point of control as a reference, 1245, 1246. So from a buyer's standpoint, you really don't want to see the market go lower from that if you're expecting an upside breakout. If you're expecting more of the same, which is to stay within this 1260 to 1230 range, and the 1230 range has really been only on Globex. The 1236 range has really been holding over during the pit session, which is, your standard 9:30 to 4 Eastern time session. So, more of the same is staying within this range, and the unexpected, but, eventually it will come, is a breakout one way or the other. And for right now, it looks like the breakout could be to the upside just because we had a monster reversal from that 1236 support level, and we moved straight up, and now we are sitting 23 points above those current lows of the day. So it's definitely, every time this market dips, it's being bought, and the moves, generally speaking, are pretty strong moves to the upside. And you can't negate the selling that's occurred also. So big swings, it's definitely a day trader's market, just because all these moves are happening intraday, and there's really no advantage for someone holding for multiple days. Usually that's how people get chopped up, because they're expecting, people are, if you're buying in this range expecting a breakout, you have a tendency to expect this, but you're getting this. So it's telling you, a lot of people sell low and buy high in these situations, instead of letting the market come to them and realizing that markets go sideways and they go up and they go down on every single time frame. So this includes, includes what the day traders are looking at, and the swing traders and the longer term investors. It doesn't matter, but it's important to realize what the market is doing in the time frames that are relevant to you. So, from a day trader standpoint, you're getting a trend and a little bit of sideways consolidation at times, but generally speaking, it's just been pretty big swings for day traders in the market. Whereas, longer term horizon, you're just getting a bunch of sideways movement waiting for some type of resolution. So know what your time frame is, and that will help you better gauge your trades and your expectations. So let's get into a few names on what's working and what's not. Okay, so let's cover GLD gold, because it continues to work, up another 2.5% today. And really, guys, we've been covering this not since the breakout, because I just didn't cover it then for no particular reason. But on this pullback and this bounce, that's when we started to cover this name. And I've been saying, I think it's okay to be buying gold. We got our pullback to the recent consolidation area, didn't even get down to the point of control, and we got a nice move higher. And guys, this is a trend. This is what you're looking for. This is where the easy money is made. And it's hard to say if this keeps going, only because we are, we're at that point of control level from September, and the value area high over the last 3 months. So maybe gold is going to take a rest, but this is still trending higher, needless to say. So I don't think you should sell gold. That doesn't make sense, but ride it until it bucks you off. Don't let this thing come back down to lower levels, unless if you have a longer time horizon. So if you have a long time horizon and you just want to buy gold on the dips, then this was your dip back here, and now you're reaping the reward. So now, but if you like to trade gold, then expect to look for sellers anywhere from these 175 level, basically where we closed today, up to 178. And if you start to see some selling pressure and gold starts to make lower highs and lower lows on, an intraday chart basis, then go ahead and take some profits. I don't recommend selling all of your gold, but go ahead and take some off. There's nothing wrong with ringing the cash register. So, if you're long gold, stay long. If you aren't long gold but want to get long gold, go ahead and buy one share of GLD at 175. Therefore, you're involved. You have some skin in the game. But when GLD pulls back, and eventually it will. It may not. It may go to the highs before it pulls back. I don't know. but I'll let you know when it happens. So you want to get involved, but you want to get involved, next time you want to get involved in these consolidation areas. And then when you see the breakout, that's when you really want to get involved. So have some skin in the game. Feel free to hold a little bit of stock regardless of where the price is. And then when the stock is preparing for the move that you're looking for, which is generally to the upside, then that's your opportunity to take advantage of. And your reference is, it's breaking out this consolidation. Look at the volume profile that's occurred straight off the point of control, a huge rocket move higher, a test back of the breakout right at value area support, and bam, a move higher. So this is a good setup that we're seeing. Now I want to cover oil because the higher it goes, the economic activity, it worries people. So we saw this big sideways consolidation, 30-minute chart. So this is going back 2 weeks. We saw our sideways consolidation pattern after our, decent move higher, and saw consolidation. Look at where the point of control formed for both weeks at the same exact level. And then prior, if you didn't buy the monster dips, which I'll show you on a bigger time frame. See the dip? We got the dip. This is the 20-day moving average. I mean, literally straight up. 50 days pointing up. Even the 200-day is starting to have an upside bias. And we get a pullback to the value area of these last 3 months. This is a 3-month consolidation period, or volume profile chart. And bam, that was your ultimate buying opportunity if you didn't already buy, on the way up from these lows. So we're seeing that oil is following through 95.72. Remember, I had a price target of $98 to $100, which $100 is just that psychological level, and $98.50, that's our point of control over the last 6 months. So, we're seeing more follow through in oil, and let's go back down to the smaller time frame chart. And you can see during that sideways consolidation period that we witnessed, the point of control for both weeks formed at $93 roughly. And look, right before we broke out, look at what occurred, just to give you an idea of how this works. We see, let me get the right tool for the right job. We see our dips, and those were, for the longer term frame, those were our buys. But if you're playing this, if you're looking for the breakout and looking at shorter time frame charts, look how oil traded, it had its nice move higher, and every time it traded down after that, it touched the point of control for the last 2 weeks and made decent moves higher, and now we're seeing a breakout. So you can see, when generally speaking, when the market or any underlying is ready to break out, it gives you one last opportunity to get in around that point of control price. Not always, but more than likely it does. And what this is showing you is that, remember, the point of control is the highest volume traded price. And when it comes down to those levels, people have a lot of money at stake there. So when they're buying it, when this is being bought, what's that showing? It's simply, as obvious as it looks, it's showing you that buyers are in control of this market. So our analysis for oil is right, and we're looking for more upside, that $98 to $100 level. So now into some trading opportunities. I'm just looking at the CNBC Fast Money, the final trades that they proposed, and Karen Finerman, she says long Polycom, and I couldn't agree more with her. I wish this wasn't up 6.5% today, 666. Look at that. But look at, what is textbook setup? This is a daily chart, and we're seeing our volume profile, our point of control for the last 2 years is right at, let's call it $15 to $16, thereabout. And look at where we have put lows in. We had a huge sell-off, and we had our, huge bottom here. And look, this is where the close, or the open for that day was right at the point of control, traded lower, and bam, it was completely rejected, and we closed higher for the day. And notice, since then, our lows have not, let me get rid of this, our lows have not even, every time they've bounced off the point of control level, generally speaking. And now we're seeing some significant upside move. So on any weakness, it looks like Polycom's a buy for your upside target. Today we ran into one around 1950 is a target, and your next target is around $21 to $22, which is also around that gap close. So realize there is a lot of people who want their money back. Think about all the people who bought who are losers if they haven't already sold. But notice the point of control, and if you're a believer of that, then this is a good opportunity. Just realize you are buying about $3 on an $18 stock above true support. So on any weakness, this is a great stock. Let's also look at Transocean Rig. This is what Guy Adami pointed out, and I think he's spot on too. Look at what's going on here. We're seeing, generally speaking, a sideways consolidation, but more importantly, where are we at? Point of control for the last 2 years. And we're finding some support. We had a huge capitulation low back in October, a huge move higher to retest these highs, and now we're finding support once again at the lower end of this range. I think this is right here, right now, guys. Your target is the high 50s, low 60s. It's clear that this 60 level is resistance, but you have a very good reference point. I think the recent swing lows is your line in the sand, and remember, you are going with the point of control. You're at point of control support. Let's also look at Watson Pharmaceuticals. This is from Joe Terranova, and man, they are spot on tonight with their calls. Right off of point of control support, I think this is a right here, right now. You have your stop below today's intraday low, and see if you can get. This is a pretty slow moving stock, but maybe up to $70 where we've seen resistance. Generally speaking, that's a pretty decent move. Just realize this setup's a little different than the other two, where the 2-year point of control, that's what you're trading off of. Here, this is a little bit, not that it's in no man's land, but just, the point of control for the last 2 years is far down here. So the other two trades, they could be a little longer term, and there could be a little more price appreciation, where this trade, you're looking for more of a bounce up to the 70 level, give or take $1, and that's where you take your profits. That's your trade. But all you saw on the 4-hour chart that we are getting a bounce off the point of control over the last 6 months. And the last one I want to cover is General Motors, GM. This is from Anthony Scaramucci, and he's saying long on an economic recovery, and frankly, I can't disagree with him either. This is the setup we're really looking for, everyone. Look at, we had our downdraft. Sorry, let me try that one more time. Had our downdraft, a nice move higher. This looks like a very nice low, and then a rejection from the 50-day moving average, and now we're getting support for the last 3 months at this point of control for the last 3 months, and now we're looking for a move higher, up 1.7% for the day. I think this is a right here, right now, with a stop under these recent lows at 22.75. Looks like the recent lows. So I would say any price under 22.50, I would say, and your upside, it looks like about $26 is a decent upside. That's your first target. And then from there, this thing, you know, we see resistance at 26 and some change. But after that, why would it not go back up to this point of control level around $28.50, $29? So if this thing gets going, you could have a great trading opportunity. And all of these trades make me want to believe that this, our poke above in the S&P 500, the market in general, it looks like we could really see some more upside, guys. The moving averages, they're moving up, so trends in our favor right now. We're bouncing off support just like we should, and now we're starting to poke our head above the resistance level. So it's going to be interesting to see if tomorrow perhaps we get a little, a move higher, but any move higher should lead to the 1265 level, and then ultimately the 1275 to 1280 level in the S&P. Downside is 1244, give or take, and 1236 and 1215 to 1210. So everyone, I hope this helps. One note on the website, volumeprofiletrader.com, it's getting closed. Expect in the next week or two an open to members who are willing to subscribe and be a part of our site. What we're going to do is we're going to have a live trading room for 3 to 4 hours a day. So you can, and I'll be controlling the trading room. We'll be looking at opportunities throughout the day, just like we are now, except for in real time. So, we can all enter trades together. And we're going to have nightly videos just like these. These videos are now, the length of these are going to be the same for members, but we're going to have free videos that are probably going to be 3 to 6 minutes in length that are going to display only one name, and likely, it comes with a trading opportunity, but that's for, people who want free video. But for members, you're going to get a great value in the coming weeks. So I hope you join. I hope you still enjoy these videos, and I'll see you tomorrow.